Alright, let's get right into it. For as long as I can remember, buying real estate meant saving up a massive down payment, dealing with mountains of paperwork, and locking your money away for years. It was a club with a very high price of admission. But now, in 2025, that's all changing thanks to something called tokenized real estate. Imagine taking $1 million apartment building, slicing it up into 10,000 tiny digital pieces, and selling those pieces online. Each piece is a token, and when you buy one, you own a legitimate fractional share of that building. It's not a gimmick. It's a real, legally backed ownership interest, recorded on a secure digital ledger called the blockchain. This is the revolution we've been waiting for. The reason this is absolutely exploding in popularity is simple. It solves real estate's biggest problems. The global real estate market is worth an almost unbelievable $379 trillion, yet most of that value is completely locked up and illiquid. You can't just sell a corner of your rental property when you need some cash. Tokenization changes that. It brings liquidity, accessibility, and transparency to an old-school industry. Big players are noticing. Even BlackRock's CEO, Larry Fink, has called tokenization the next generation for markets. We're seeing this play out in real time, with projections showing the asset tokenization market could hit a staggering $16 trillion by 2030. And real estate is leading that charge. It's a complete game changer. Think about it this way. Instead of needing $100,000 for a down payment on a single-family home, you can now invest as little as a few $100s. Platforms like Mogul, for instance, let you get started with just $250. This opens up the world of institutional-grade commercial and residential properties to everyday investors who were previously sidelined. You can now own a piece of a luxury condo in Dubai, a commercial building in New York, or a rental property in Bali, all from your laptop. This isn't just about making things easier. It's about fundamentally democratizing one of the most powerful wealth-building tools that has ever existed. The momentum is undeniable. We're seeing governments and major institutions dive in headfirst. Dubai's land department is putting title deeds on the blockchain. Norway launched a massive €150 million real estate tokenization program. Even here in the United States, major financial institutions like JP Morgan are developing their own tokenization platforms. It's happening because the technology works. It uses smart contracts, self-executing code, to automate things like distributing rental income directly to token holders' digital wallets. This cuts out middlemen, reduces fees, and makes the entire process more efficient and secure for everyone involved. The future isn't coming, it's already here. So, how do you actually do this? It's surprisingly straightforward, but you need to be smart and do your homework. The first and most important step is choosing the right platform. You want to look for platforms that are regulated, transparent about their legal structure, and have a solid track record. For example, a platform like Binarix structures each property within a Wyoming DAO LLC, which gives investors direct co-ownership rights under United States law. Another platform, Mogul, operates on the secure Avalanche network and is known for its intense vetting process, claiming to list less than 1% of the properties it reviews. Spend time reading about their security, fees, and what other investors are saying. Once you've picked a platform you trust, the fun part begins, selecting a property. You'll be able to browse a marketplace of available investments just like you'd browse Zillow or Redfin. You can filter by property type, commercial, residential, mixed use, and location. Each listing will have detailed information, including financial projections, property documents, the legal structure, and expected returns. Mogul, for example, reports average cash-on-cash returns of 10 to 12%. Look through the details, understand the investment thesis for that specific property, and choose one that aligns with your financial goals. Don't just chase the highest advertised return, look for quality assets in good locations. Next, you need to set up and fund your account. This process will feel familiar if you've ever opened an investment account before. You'll need to register on the platform and complete the standard Know Your Customer and anti-money laundering checks. This is a crucial step that legitimate platforms use to ensure they are compliant with financial regulations. After you're verified, you can fund your account. Most platforms are flexible, allowing you to deposit funds using either traditional fiat currency through a wire transfer or bank deposit, or by using cryptocurrencies like the stablecoin USDT. With your account funded, you're ready to buy your tokens. You'll go to the property page you selected and decide how much you want to invest. You then purchase the corresponding number of tokens, which represent your fractional ownership. On Mogul, you receive a special NFT that represents your share in the property's LLC. Once the transaction is complete, that's it. You are officially a fractional real estate investor. You can then manage your investment directly from the platform's dashboard, where you'll see your holdings, track property performance, and most importantly, receive your share of the rental income, which is often paid out automatically and monthly via those smart contracts we talked about. Let's really break down why this is such a big deal. The number one advantage is, without a doubt, fractional ownership and accessibility. Historically, if you wanted to invest in a prime commercial building, you'd need millions of dollars. That world was closed off to most people. Tokenization smashes that barrier to pieces. By digitizing ownership into small, affordable shares, anyone can participate. As we've seen, platforms like Mogul have minimums as low as $250. This means you can build a diversified portfolio of different types of properties in various locations around the world, something that was previously only possible for the ultra-wealthy or large investment funds. The second major benefit is liquidity. This has always been real estate's Achilles heel. If you own a rental property and suddenly need cash, selling it can take months, sometimes even longer. It's an incredibly slow and expensive process. Tokenization introduces secondary markets. Platforms like Binarix have built-in marketplaces where you can list your property tokens for sale to other investors on the platform. While these markets are still developing, they offer a path to liquidity that is light years ahead of the traditional model. Instead of waiting months, you could potentially sell your stake in a property in a matter of days or even hours, providing flexibility that real estate investors have only dreamed of. Next up is transparency and security, which are built into the very fabric of the blockchain technology that powers this. Every transaction, from the initial purchase of a token to the monthly distribution of rental income, is recorded on an immutable public ledger. This means you have a permanent, verifiable, and tamper-proof record of your ownership and the property's financial performance. You can see everything in real time. There are no hidden fees or backroom deals. This level of transparency builds incredible trust and confidence, taking the guesswork and anxiety out of tracking your investment and ensuring you're getting your fair share of the profits. Finally, tokenization makes real estate a truly global asset class for the individual investor. Before, buying property in another country was a logistical nightmare filled with complex legal hurdles, currency exchange issues, and local regulations. With tokenization, these barriers dissolve. You can sit in your home in the United States and invest in a property in Turkey or Montenegro through a platform like Binarix just as easily as you could buy a stock. The platform handles the legal complexities and local compliance, wrapping the asset in a secure, investable structure. This allows you to diversify your holdings internationally and take advantage of growth in emerging markets without ever leaving your home. Now, as exciting as all of this is, we have to be realistic. This is a new industry, and with any new frontier, there are risks you absolutely must be aware of before you invest a single dollar. The biggest challenge right now is the evolving regulatory landscape. The laws governing digital assets and tokenized securities are still being written and can vary dramatically from one country to another. What is considered compliant in one jurisdiction might not be in another. This regulatory uncertainty creates a layer of risk, and you must choose platforms that are deeply committed to navigating these legal waters carefully and transparently. Another significant risk is tied directly to the platforms themselves. You're placing your trust not only in the real estate asset, but also in the technology and solvency of the platform you use. You need to ask tough questions. What happens if the platform goes out of business? How secure are their smart contracts from bugs or hacks? While top platforms invest heavily in security audits and legal protections, like setting up each property in a separate LLC to shield it from platform-level issues, this technical and operational risk is real. Your due diligence on the platform is just as important as your due diligence on the property itself. We also can't ignore market risk. While tokenization can provide more liquidity, the value of your investment is still tied to the underlying real estate market, which goes up and down. Furthermore, the liquidity on these secondary markets is not guaranteed. On some platforms, the pool of buyers might still be small, meaning it could take time to sell your tokens at the price you want. The price of the tokens themselves can also be volatile, influenced by both the property's performance and sentiment in the broader crypto and digital asset markets. Don't assume you can cash out instantly at any time. Treat this as a long-term investment. Ultimately, tokenized real estate represents a monumental shift in how we invest, offering incredible opportunities for accessibility, liquidity, and transparency. The potential to build a diversified global property portfolio with a small amount of capital is genuinely revolutionary. However, it's not a risk-free path to riches. You have to approach it with a healthy dose of caution, conduct thorough research, and understand the challenges. Choose reputable platforms, diversify your investments, and never invest more than you are willing to lose. If you do that, you'll be well positioned to take advantage of what is shaping up to be the future of real estate investing. Enjoyed learning about tokenization? Give this video a thumbs up, share it with friends, and hit that subscribe button for more. Drop a comment below if there's any other jargon you'd like us to explain.